Let's analyze the Marathon Digital stock today. We'll look at its analysis, volatility, support and resistance levels, and market forecasts. To start, Marathon Digital stock has been stagnant for several months, consolidating for about 60 days. It is important to remember that this stock is tied to cryptocurrency mining, specifically Bitcoin. By overlaying the Bitcoin chart on this stock, we can observe that until a certain point, especially since the beginning of 2021, the stock closely followed Bitcoin's movements and even outperformed Bitcoin at times. However, recently, despite Bitcoin's significant increase to its current trading level of $64,000, the stock hasn't shown much growth. This raises questions because cryptocurrency miners are currently earning the highest revenues ever. So why isn't the stock growing? Let's delve deeper. We'll start with volatility. As we can see, the stock's volatility is gradually decreasing, indicating stagnation. This is a normal situation since Marathon Digital is in consolidation. The longer it remains in a sideways movement, the more the volatility will decline. However, given the stock's strong connection to cryptocurrency, it is unlikely to drop significantly. Now, let's look at the volatility smile. The volatility smile indicates the direction traders see potential growth or decline in the stock. In the short term, volatility increases for both upward and downward movements, suggesting that the stock could either rise or fall in the near future. However, for longer expiration dates, volatility increases only for the downside, indicating that traders expect the stock to drop in the long run. This is a typical situation as investors and traders hedge their purchase stocks by buying put options, making put options always more expensive than call options. Let's now examine the historical and implied volatility. Currently, historical volatility is represented by the gray line, and implied volatility is the white line. We can observe that the implied volatility is currently much lower than its historical values. As I mentioned earlier, this is due to the stock's consolidation phase, resulting in a decline in volatility while the stock moves sideways. However, it's important to note that volatility always reverts to its historical levels. Consequently, we can expect a surge in volatility, indicating potential opportunities. The question is, how can we capitalize on this? Let me show you. Artificial intelligence can help us develop a strategy. We'll set a mid-August timeframe and assume that volatility will increase by, say, 15%. The AI will then calculate the appropriate strategies for us. One suggested strategy involves selling a put option with a strike price of 24 for August and buying two put options with a strike price of 19 for August. The effectiveness of this strategy looks as follows. We achieve a profit if the stock either rises or falls, but incur a loss if the stock remains at the $19 level. This demonstrates one way to play the volatility increase. However, I do not recommend opening any strategies without proper management, as they require careful oversight. Now, let's look at the support and resistance levels. There is a significant resistance barrier at the $20 level, which Marathon Digital has been unable to break through. There have been some short-term breakouts, but the stock tends to fall back afterward. We also see significant resistance at $20.50, $0.21 corresponding to call options. These represent substantial resistance levels that the stock struggles to overcome. One might ask why the stock cannot surpass these levels. The answer lies in the presence of these large option barriers. To understand this better, let's review how market makers and options work. When investors buy call options, market makers are obligated to sell them. To avoid unlimited risk from the sold call options, market makers hedge their positions by purchasing the underlying stock according to a delta-neutral strategy. This classic strategy aims to benefit from selling call options. The higher the stock price, the higher the delta, and the more shares market makers need to buy. This creates a feedback loop. Therefore, to prevent market makers from having to purchase more shares, they aim to keep the price at certain levels. Thus, the key resistance levels for Marathon Digital stock are currently at $20 and $21. If a significant event occurs and the stock breaks through these levels with high volume, there is substantial growth potential. However, this analysis is focused on the period up to June 28th, after which new support and resistance levels will emerge due to the high volume of weekly options. This scenario doesn't add stability to the stock, but it's the current situation. Let's return to the broader stock analysis. My philosophy is not about predicting price movements, but about effectively managing a portfolio through mathematical analysis. The goal is to construct strategies that yield profits regardless of the stock's direction. Here's an example of such a strategy I've developed. If the stock rises to $26, we make $6,000. If it falls to $15, we make $4,000. Thus, we profit no matter where the stock moves, except in the unlikely event of a sharp drop to $8, which would be a 60% decline, leading to losses. This trading strategy involves selling options, making it quite risky and requiring active management. You need to close, buy, or sell options at the right moments, demanding a high level of skill. Hence, my primary objective is prudent portfolio construction and management, and I advise everyone to learn effective management to ensure profits regardless of stock movements. Looking at Marathon Digital's fundamental indicators, the company is currently unprofitable, which is surprising given the substantial profits in cryptocurrency mining. Perhaps the company will show profitability in the future, but for now, it remains in the red. Additionally, the company's performance is heavily tied to cryptocurrency prices. With Bitcoin currently outperforming the stock significantly, there's a concern what happens if Bitcoin's price starts to decline. It seems the current Bitcoin price is already factored into Marathon Digital's stock. Therefore, if Bitcoin's price falls, it's likely that Marathon Digital stock will also drop. Once again, the question arises, can Marathon Digital stock reach Bitcoin's levels, potentially rising to $40 or $50? Given its lack of growth during Bitcoin's surge, the potential seems limited unless significant news triggers such a rise. Let's examine the market's forecast for further insight. The market predicts that by mid-August, the stock will be valued between $16 and $18, indicating a slight decline by the end of summer. Looking at the year-end forecast, the stock is expected to be between $12 and $14, with the highest probability of it settling in this range. This significant predicted decline suggests that going against the market may not be wise, especially considering the potential for Bitcoin's price to drop. Since predicting the movement of stocks or cryptocurrencies is inherently uncertain, the current market consolidation in Bitcoin adds to the unpredictability. If this is a major sell-off phase, Bitcoin's price might drop further. However, this is purely speculative, and I cannot provide a definitive prediction. Therefore, it's prudent to continue monitoring Marathon Digital stock and its financial reports closely. As a reminder, I've started a new portfolio from scratch, demonstrating the stocks I buy and the strategies I employ, ensuring maximum transparency and realism. Feel free to leave comments and follow along. Best of luck to everyone.